Good morning, everybody. Happy Tuesday. This is the morning show. Spencer, Steve, JC, Alfonso with you as always. What are we talking about today? Let's see. Look at my list. Apple continues to look like shit. So probably talk about that. Maybe we'll give some highlights of JC's conference call last night. I know Steve has lots of things on his mind. Everything from B. Riley to this Damodaran interview last night. We'll talk about that. Target earnings and focus earnings not expected to be good, and were a little bit better than they cleared a low bar. It was a low bar, and they cleared that. So I guess that's something. I don't know. Todd Sohn is our guest today. He'll be on at 9. Patrick Donawillo will be on at 9:30. You know the drill by now. Hit that thumbs up for me, please. And let's go.
Ho, ho, ho. What's going on, everybody? Guess who's back?
We got cut off by the show. Do you have any more nice things you want to say to me or Spencer this morning about my setup, my earpiece? Anything?
I just want you to know that I am in the good graces of the California Department of Agriculture.
Hey, congratulations, JC.
Yeah.
Just want everybody to know things are good. Things are good. Dude, there was literally a private investigator, and that sounds a little aggressive, but it it's a good egg. It was definitely human error. I want to show you guys what it is.
It was probably just a random audit, no?
No, we screwed up.
Oh.
Here, this is what it looks like, so you guys can see. So this is the Cabernet Sauvignon. The reason they're doing it is because they're trying to get their money. They want the taxes. So if there's 5 tons of grapes being crushed somewhere in Napa Valley, they want to get theirs. That's all, that's really all it is. I mean, it's harmless grapes, but they have to follow that. So this was the Weighmaster certificate from September. Actually, it was early October, and it was 5 tons total. The containers were about half a ton, so it was about 4.5 tons total. So high yields across the valley this year. Real low yields last year. We got twice as much almost this year.
That's a lot of pounds, bro.
It is 2,000 pounds is 1 ton.
Yeah, I know that.
So we had almost 10,000 pounds. We had about 9,000 pounds of grapes.
Why is there no word for 1,000 pounds?
I don't know.
Ton.
I don't know. It's an American thing. It's an American thing. You know how we use gallons and shit. Make everybody all confused.
Yeah.
The Americans do a lot of things right. I'm gonna give the metric system. I'm gonna give the others the win on that one, right? Can we give the rest of the world the win?
Oh, easily, dude. That's a dumb one.
Yeah, that's a dumb one. Shout out America, but that's a dumb one. So anyway, for those worried about me, the California Department of Agriculture,
we're all good.
We're all good. No problem.
Great.
MBD.
And Spencer, you've figured out your email issues. You figured out how to use your email since yesterday.
I don't want to talk about that.
So everybody's good. Everybody's good on a Tuesday morning. Let's talk about the markets.
Yeah, we are.
Yeah.
All right, let's do a quick little rundown here. Dow futures down 120 points this morning. That's about 1/3%. S&P is down about the same, 20 handles there. NASDAQ 100 futures down over 100 points here. About 60 basis points. Interestingly, 30-year bond futures actually up almost a full percent. Maybe that relationship is changing somewhat. Very, very interesting. Silver up 1.5%. Gold up 1%. So silver outperforming this morning again. You had about 160 basis points of alpha yesterday between silver and gold. That's something new also. So a couple of things to monitor there. The bond market and precious metals. Copper flat, oil down 1%. The dollar mixed in early trading. Volatility index up close to 14 as the U.S. 10-year yield down to 4.15%. Then, of course, in the old funny money, we've got Bitcoin down this morning, well off the lows. but down this morning nonetheless, about 600 points, right around 68,000. Absolute monster move last night in the after-hour session. Ethereum 3,760, up 130 points today, 3.5% there. Solana continuing to rock and roll, flat on the day, about 132. Spencer Israel, total Twitter market cap, total crypto market cap, 2.5 trillion. Moving on up. Moving on up.
I have an announcement to make, and then I want to talk about bonds.
Please.
You've convinced me.
Of?
I'm going to feed the ducks a little bit here. Bitcoin only. Bitcoin only.
You're going to feed the ducks on the Bitcoin?
Yeah, I guess so. With the intention that we get broadening participation in the coming weeks and months, and that money is redeployed probably not into Bitcoin, but into something higher beta. I don't think this cycle ends and we look back and say, wow, Bitcoin crushed everything. Bitcoin outperformed everything. Nothing else could beat Bitcoin. That just would shock me. I think this cycle ends and there's shit coins that we've never heard of and we'll never hear of again that exponentially outperform the blue chips, Bitcoin and Ethereum. And those are the ones I'll be looking to buy. So I'll feed the ducks here at this logical level of overhead supply, get a little dry powder and put that back into some other juicier stuff.
I really like,
All right.
Is that okay, Spencer?
Yeah, sounds good to me.
Throw up slide 2 there. Big transaction last night, $16 million for this picture on the internet. And this is the second highest traded CryptoPunk of all time. CryptoPunk floor price up above $200,000, by the way. So the animal spirits are alive and well, in case anybody was wondering.
Yeah, totally.
Wait, can I ask a question? I don't follow NFTs super closely. Did the NFT market crash because the currency of NFTs crashed, or just the prices, like, or was it just the price?
It's both.
Of NFTs?
Both.
They're like
Okay.
international.
Both.
Yeah.
It's like one of these emerging markets. Like, think about like emerging markets and the stock market's going down. So like they're losing money on the currency, they're losing money on the stock market, right?
Okay, so
This
it's
is kind of like
it.
that. In
Yep.
fact, you know, like I'm making a ton of money in my CryptoPunk, but it's actually worth less ETH than what I paid. But ETH is worth a lot more.
Yeah.
Right, to your point,
Okay.
Spencer. Right.
The valuation is lower, but the currency effect is dragging it higher.
Yeah, like
Oh,
I live
so
in
this is
I
a-
live in
this is a
I live in
value
dollars.
CryptoPunk.
So like if I lived in Ethereum, like I'd probably I'd be definitely losing a little bit of money in my CryptoPunk. But since I live in America with US dollars, like we're good.
Remember when that was like a conversation among people? Like,
Yeah.
how should you value your crypto?
Yeah.
Have we ever valued any financial instrument or asset in anything other
In
than
the last cycle, I was looking at things priced in ETH.
Yeah, like that's not the right way.
I mean, anything like on any blockchain transactions, like you're pricing it in ETH. Like when I borrow, I'm borrowing in ETH. When I'm loaning out, I'm
Right.
loaning ETH. So like there are situations where you're priced in ETH.
Yeah.
You know?
Listen, it's a good way to force long-term exposure to these blue chip currencies, right? It's a big long-term bullish bet on Ethereum.
Look, see, Chris Benson makes a great point. He lives in Europe and still values everything in USD. Are you American, Chris, or are you European? I guess that doesn't really matter, but you know.
I mean, futures markets around the world, a lot of them are still priced in USD outside of America. So yeah.
So how about so throw up slide 4.
Bonds. I want to talk about bonds.
I love that Strazza is like coming in hot, wanting to talk about bonds. Like, who is this guy?
Yeah, bonds.
I understand, you know, CryptoPunks and the Bitcoin and the Solana and the stock market and the Nvidia. Quietly, gold just closed at a new all-time high. Nobody cares. Nobody cares.
Like, I couldn't care less.
I know. And your sentiment here is basically what everybody's thinking. They're like, oh, who gives a shit about gold? We could buy monkey pictures and we could buy, you know, AI stocks or whatever. Who needs this rock? That's how people are thinking. Well, just saying, new all-time highs.
Would people care a lot more if gold was outperforming on a relative basis?
Well, it's outperforming bonds. Not that I guess that is such a
That's not exactly a
not
high
such a high
bar.
bar. But yeah, and outperforming stocks over the last couple of weeks as well. Why don't you go down one? Here's the big one. This is the one that I think is getting unnoticed. This is the silver gold ratio. So historically, when precious metals are doing well, you'll see silver outperforming gold, right? The higher beta, crazy little cousin of gold tends to do better on the way up when precious metals are doing well, generally speaking. It works both ways. When precious metals are getting the crap kicked out of them, silver's just destroyed and gold's going to go down less, right? That's sort of the mechanics here. And, silver digging in, like I said, about 160 basis points of alpha yesterday between silver and gold, not nothing. And again, this morning, maybe about 40 basis points of alpha. But nevertheless, if they can get going here, logical level. You take the COVID low, you take the 21 highs. This is the 61.8% retracement of that entire move. So if you're going to see some outperformance in silver over gold, this would be a logical place for that to happen, no?
Let's say the miners there's nothing exciting there in the price action from the miners yet.
Well, for the miners to get going, I think you'll see miners getting going and silver outperforming gold at the same time. Would you agree with that?
Yeah, let's see it. Great.
Also, go back to the gold chart. Is anybody impressed with with gold making new highs and holding in there very well this whole time, despite rising real yields and a stronger dollar? No, I was impressed. Nobody cares.
I actually considered taking gold off of my screen last week because I was like,
"That's the bottom."
I didn't do it. It's still on there. It has real estate.
And let me ask you this: why would you want to take gold off your screen? Like what?
Because I realized that I never look at it. It's on there, and I never look at it.
Well, it hasn't done shit in years.
I mean, yeah.
But what do they say? The bigger the base. What do they say, Spencer?
The higher it goes up.
That's right. Something like that.
Yeah.
That's right. When I build Legos with my daughter, that's what we say. And she's like, Daddy, I'm building a base. And I'm like, what is it? Bigger the base? And she goes, the higher in space, Daddy. She knows. It's true. All right. Let's give Strazza his moment. Strazza, for once in his freaking life, wants to talk about bonds. Usually I'm the one that wants to talk about bonds. What is it about the bonds that you want to talk about here?
I got some interesting stuff here. So throw up the 10-year chart. 4.25, 4.2, 4.25. Big level. Making a strong move back below it here today. TLT bonds look good for a trade. I thought about it last week. I didn't pull the trigger. A little scoop and score. Why can't we own bonds here? Is it just because there's too many better options? That's why I don't own them at this point. But I don't hate.
I think that's one of them.
I
think that's one thing. Is what are the alternatives?
And you're talking about gold. I could point to ARK or speculative growth stocks, right? We're getting a lot of signals from equity markets that are saying rates down, right? Equities are not buying this higher rates theme. Do we listen to them?
I don't know. Inflation protected treasuries making new highs relative to nominal yielding treasuries. Does that scream lower rates?
I said the equity market.
No. I know. Yeah. But what I'm saying is, like with inflation protected treasuries making new highs, new 3-month highs, relative to nominal, crude oil making new multi-month highs.
Yeah.
Apple making new multi-month lows. Does that scream lower rates or does that scream higher rates?
I wouldn't put Apple.
I'll take Apple out of the equation. They just look exactly the same.
I'll give you the other ones.
And we're making money on it, so I'm happy with it. But forget Apple. Just the inflation situation. You think that screams lower rates?
But this is great because think about what we just said to each other. I said
5-year break-evens, 10-year break-evens.
So I'm saying the equity market, there's a lot of intermarket information there suggesting lower rates roll over, not buying this, slight.
Like what? Like small cap growth outpacing large small cap value?
Yeah, and even just
that says lower rates theoretically, right?
And the stocks that are working, right? The speculative stuff that biotechs are working, that's not higher interest rate stuff.
Right. What is it? Isn't that what I'm saying? Small
Yes,
cap
yes.
growth outpacing small cap value, right?
Totally. So equity markets saying no, lower rates. But what you're pointing out is that commodity markets and the bond markets pretty much on the same page saying higher rates. So we have, some really mixed evidence here, which makes for, an interesting conversation. I don't know where it goes.
Makes for friendly banter. Good friendly banter.
You know what's been the best tell this whole time? I'm pulling up the German 10 right now. We're down big here today, a big rollover. Just watch these European
yields.
Yeah, these European yields have just been so good.
So you buy bunds? Are you buying bunds?
No, I would express it in U.S. markets probably, but I mean, these developed European yields have really kept us on the right side of the rate trade for several years now. They've been the best evidence. So I would look there, and you can draw a short-term trend line from the late December lows in any of these things, and you get a couple touches right over the past few months, and we are blasting right through it right now. Whether you're looking at the Spanish 10-year, France 10-year, German 10-year. Let me see about UK. Yeah, UK is close. So all of them are starting to look pretty similar, breaking this little short-term trend. Italy looks terrible. So that stands out.
All right.
Listen, lower
Let 'em
rates.
Let them dance.
I think, let's be completely honest. I'm obviously rooting for someone who's very long risk assets. But just like you said about, hey, look what gold is doing despite what real rates are doing. Look at what stocks are doing despite rates ticking higher pretty much all year. So if you do get that rollover, are these stocks going to stop working? Or are they going to be working a lot better than they already are?
I mean, listen, if small caps actually break out in terms of like the Russell 2000 or something like that, that's probably not screaming higher rates.
Hell no. Not at all.
So that's, small caps failing at the December highs here. So far, I mean, who knows what's going to happen, I think, is part of the higher interest rate situation. So we'll be monitoring that.
Are small caps failing? They're above 200?
No, they failed yesterday. So first attempt failed.
Small
Whatever.
cap?
We'll see. Yeah, Russell 2000.
What are you talking about?
Yeah, Russell 2000 futures got to the December highs and then failed yesterday.
Okay,
that's what I'm talking about.
Why not just look at the Russell 2000?
You can, sure.
Yeah.
I like the futures market, trades more.
Listen, 200, 2000 is our level. Why are you moving it?
Nobody's moving anything. I'm talking about Russell 2000 futures. Nobody's moving anything. The Russell 2000 futures got to the December highs yesterday and then failed. I'm not saying they can't break out today. They just failed yesterday. You don't have to get all your panties in a bunch about it. It's not my fault.
My panties are in a bunch. You're moving the goalposts again because we said
moving any goalposts.
2 years now.
I don't have any position. I don't have any position in the small cap indexes. I don't give a fuck.
And now we get 200. Oh, but the pivot highs.
What pivot highs?
Let them dance. There's big progress here. They finally got 200. Let it shake out. And if you look at mids, they look good. Micros are getting close. A lot of these.
Why do the mids look good? Because they got back to the former highs and are there now and failing again?
I mean, mids look a lot better than smalls, right?
Oh,
not
a high bar there, Strazza.
No, not at all. But new all-time high for mid caps right now, pre-market. MDY.
Thanks.
I don't know. Maybe you were looking at the futures.
Do mid caps trade futures? I don't think they do.
I don't know. Anybody trade mid caps?
All right, I got one. Slide 9. This is a big feature of yesterday's conference call. Spencer, I know some people were asking about the boot camp that we did 2 weeks ago. Anybody who participated in that boot camp gets access to yesterday's video. We still have the link available to the boot camp there, Spencer.
Yeah.
Can you drop that in there, guys? So if you guys missed last night's conference call, click the link that Spencer's about to give you so that you get complimentary membership to All Star Charts Premium. You can get last night's conference call, and you also get the boot camp. That's pretty good. So these are the Fab Five. So I think that these 5 charts really help put things into context because any correction that we get, whether it be a correction through time, whether it be a correction through price in the overall market, from any sort of structural perspective, it's really hard to be bearish if these 5 charts, the prices on these 5 charts are above the prior cycle's highs from late 21, early 22. The Fab Five, you ready? New York Stock Exchange Broker Dealers Index. We're above those prior highs from early 22, late 21. From a structural perspective, these are monthly candles, guys. So this is why it's so important that once a month, we take the time to take a step back and look at the bigger picture, the longer term trends, which is up. I don't know if you heard. So you're not going to get any crash or any bubble popping with broker dealers above the prior cycle's highs. Next chart. Industrials. These are the generals of this market. Germany is not making new all-time highs because of technology. They have one tech stock in the DAX. It's industrials. France is not making new all-time highs because of technology. It's making new all-time highs because of industrials. These are the generals of this market. It's not technology. And if the generals are above the early 22 highs, the world is not coming to an end. Next chart. Semiconductors. Need I say more? If we're above the prior cycle's highs, these were the leaders. These were the first ones to break out, in fact. Next chart. Homies. Home builders, big industry group there in consumer discretionary, where consumers spend discretionary income. If we're above the prior cycle's highs from late 21, early 22, again, hard to be overly bearish. And then last but not least, here's the XLK. Despite Apple getting the crap kicked out of it, technology still above those former highs. Those are the Fab Five. Any corrections that we get fall within the context of an ongoing secular uptrend and bull market, as long as these Fab Five are in place. Strazza, anything you want to add to this group, or do you think this is a solid list?
This is it. I mean, this is perfect. There's nothing needs to be added to this
It's a
list.
good list.
Five is
Good
plenty.
list.
These are the market
These are
leaders.
the market leaders.
These are the cycle leaders. Clear as day. New post on industrials. We went through like every subgroup. It's finally published on the website. Go check it out. The strength under the hood in industrials just continues to blow my mind. It's really good. It's really good stuff.
Who's the guest on the show today? Todd Sohn?
Yeah, I can't wait for Todd. Hey, you want to play a game?
Sure. I like games.
Coinbase. I'm thinking about crypto vehicles always. Coinbase is up 6x from its lows in January of last year.
Still only 55 billion market cap.
But wait, where does 55 billion put it? How big do you think these financials are these days? Right?
What do you mean?
How many regional banks are larger than Coinbase?
Is there like a super regional that's bigger, like maybe one, maybe?
Two regional banks.
What, like Key Corp or something?
Oh, not even close. PNC and US Bancorp.
Got it.
Coinbase.
US Bancorp
Coinbase
is a regional bank?
Dude, Coinbase is half the size of like Schwab and Citibank right now. Coinbase is larger than the NASDAQ. Coinbase is larger than Interactive Brokers. The whole time since we got involved, we've been saying target here. But really, if you're going to hold this through the cycle, you want those old all-time highs. And that sounded crazy when we were trading at 40, 50 bucks because the old all-time highs are like almost 400. If we get there, Coinbase is about $100 billion market cap. That puts it as big as some of the big six banks in the US. So while I'm still incredibly bullish, we are getting to a place where Coinbase's valuation will need to be backed up by some monster earnings. And if you go back to 20 and 2021, we do have a playbook. This company doesn't just do well during bull markets for crypto. They print money. Their EPS just like absolutely blew out during the last bull cycle. I don't see any reason why they won't do that again. They'll probably do even better. And that's what the market's pricing right now. These guys' earnings with cryptos rallying the way they are going to be really, really, really interesting. And I think Coinbase becomes a much tougher trade from here to the old highs because that market cap is huge now. I mean, this is one of the bigger brokers, larger than most banks. It's one of the largest financials now. So come a long way. Good for them. But I think it's always interesting to compare these market caps. No?
I mean, you know me. I mean, this is right up my alley. To me, like when you talk about price, I like putting things in perspective. I just like putting things into context, when it's like, oh, all these cryptocurrencies, it's $2.5 trillion. That's nothing. That $2.5 trillion and zero might as well be the same thing. You know, last year, a year ago, when these little banks were blowing up, it's like $1 billion here, $1 billion there. Like, who cares, right? It's irrelevant. So I really love the fact that you're putting the market capitalization into context with others. I don't know if it's necessarily fair that you're comparing Coinbase to a regional bank. I mean, you could do anything you want, but
is it not fair to compare them to Interactive Brokers or Schwab though? Same business.
yeah,
They're doing the same stuff.
Maybe. I don't know. It's above my pay grade. I don't know.
Listen, bottom line is it's interesting how big this company is getting.
This
was a zero, remember? A year ago? This was a zero.
Was it?
Get laughed at if you like Coinbase in late 2022.
Was it a zero though?
This thing was priced for nothing.
All right. Well,
8 billion market cap.
Yeah, now it's 55. It's a hell of a move. I mean, you know, Bitcoin triples or whatever it did. Obviously, this thing's going to move. By the way, the price of Bitcoin at those times that you're saying in the fall of 22, Bitcoin was trading 4 times the S&P. Now it's 12 times. It's probably more now, actually.
Here's a new test you could do. Signs of a bull market. Coinbase, the app, has been down like 3 days in a row.
Yep.
13.5 times. Bitcoin is 13.
That only happens in bull markets, right?
Everybody's asking. People want to be paid with Bitcoin and not cash when you're doing Venmo. We're getting there. I like it. You guys keep any Bitcoin in your Venmo? Your cash app?
I honestly forgot that you could do that. So
that's what I'm going to be selling.
No.
I'm going to sell it from the Venmo, move it.
The fact that you're buying Bitcoin on Venmo is hysterical.
You can do it.
Yeah, whatever.
It's funny.
All right.
You don't think it's funny? I think it's funny.
Well, somebody asked me the other day, we were doing like whatever, like splitting like a bill or something. Hey, can you send me Bitcoin on Cash App? And I said to her, I said, listen, I own Bitcoin on like 5 platforms, and I'm not going to make that 6 just so I can Cash App you some Bitcoin.
One more chart because we're getting asked about it from the chat here. We'll bring in Mr. Sohn. I'd love to hear his thoughts on it. Throw up slide 2 there, Spencer.
Yeah. For those keeping score at home, we have another negative Apple headline this morning.
I can't wait to ask Todd Sohn about this Apple shenanigans.
What's shenanigans about downtrends?
I mean,
bad news is coming in the direction of the underlying trend. Is that surprising? What's the bad news of the day? Out of curiosity, Spencer.
Right. A firm that I have never heard of, not to be derogatory, but never heard of. Counterpoint Research published a report that says Apple's iPhone sales in China fell 24% in the first 6 weeks of the year on a year-over-year basis.
I would love to buy Apple at
that
lower prices.
That data could not be trusted.
I said.
Oh, did you hear the GDP?
Don't shoot the messenger.
No, nobody's shooting the messenger. But this is sales in China. Who the hell knows what's going on over there, dude?
China. Did you hear about their GDP forecast?
Who's GDP?
Oh,
China?
Yeah, I heard about that. Yeah, I heard about that one.
Tell me, how gross is it?
5%. Sounds great. Sounds great.
That's the goal. That's the goal. 5%.
Problem is the forecast you can't trust, and then they'll tell you what the real number is at the end of the year, and that's not real either.
Which
so
you also can't trust.
It's all a fugazi. Todd Sohn, bring him in. He says Chinese food better than Chinese equities. I agree.
Well, let's talk about
all
it.
Right.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Todd Sohn in the house.
It's true. Chinese food is definitely better than the stock market.
What's your go-to Chinese restaurant in the city?
Oh, wait, am I uptown like convenience?
No, you get one spot on the island. Where do you go?
Cafe China.
Cafe China, where is that?
In like 36th and 5th or something like that.
Cafe China.
It's
okay.
really good. Really
Yeah, what do you get?
Good.
What do you get?
Just everything. noodles,
everything.
rice,
Noted. Duly noted.
the lot of good spicy chicken dishes,
Spicy chicken
and
dishes.
like the fancy, not the fancier stuff, not like your typical go-tos.
All right, go with the fancy stuff. All right, what's your second favorite?
Jingfong downtown. I don't even know if it's open anymore. There's one on the Upper West Side now, so that's easier.
All right, I
But
like.
I would. So we should have the CMT symposium at Jingfong because it's big enough.
Done.
Or Golden Unicorn, one of those places.
Dude, Golden Unicorn for dim sum, forget about it, man.
Yeah. I mean,
Man, you got to go with a Chinese guy though. Like you got to go with like a Chinese friend.
I don't know.
Like if you just go like a bunch of white guys, you're gonna be standing
I don't
around
know
for
if I
hours.
have any.
Dude, if you're new to New York City, get yourself a good Chinese friend. Go to dim sum with them. You're gonna get seated right away. I'm telling you, dude. I'm telling you.
This is true, but we should have an event there, like literally 300 people
At the Golden Unicorn.
Yeah.
You know what I love about the dim sum? Like the halftime show of the dim sum, they bring like the little donuts. Then you get back to feasting again. That's Cubans don't do that shit, man. That's awesome.
If you're uptown Shanghai, try dim Shanghai on 78th and 3rd.
What about Shun Li? That's old classic.
Shun Li, what am I thinking of? Philippe Chow?
No. Philippe Chow is like one of these fancy places.
Yeah, Philippe Chow
Shun Li is my spot, man.
All right, I'm bringing it back. We're bringing it back.
We could do this for a while.
We could do this all day. All right, so Chinese stocks. We're buying Chinese stocks, no?
If you want to rent them, be my guest.
We started dipping. So listen to the strategy. So we started dipping our toe, buying leaps out to next year.
Okay.
On the FXI, right? Scaling in, put a third of a position on, right? And then we got some resting orders cheaper on these FXI calls, right? And what we're thinking is if those get triggered and actually get hit, then the premiums on the puts are going to be more elevated. We can sell those too.
Okay.
That's the strategy. You like that or no?
I agree with the idea of playing China through options because
it's the China's not going to zero trade.
Yeah, and listen, it'll bounce. My favorite stat, I forget, we probably brought it up here, is that over the last 30 years, the MSCI China index, the return is 0%. You've literally made no money there unless you are doing what you're doing. You're doing it tactically. It's not an investment, and it's immensely volatile, and it's totally ruined emerging markets, by the way, as an asset class. But I agree that, so here's what's really interesting in my work right now is that we know that the sentiment there is terrible, right? The headlines are bad. They're making up GDP numbers.
The magazine covers are coming out.
So the number of Chinese ETF closures has really picked up recently.
Ooh, I like that.
And so, and what's also, and it's who is closing. So Crane Shares is a big Chinese player, right?
That's the K-Web guys, right?
K-Web. So they're not going to close K-Web. That's too good for them.
That's the one that actually does.
Yeah, but a lot of their kind of these random esoteric China funds, because they just haven't been good and there's no interest, they're closing those. Global X closed their entire China sector suite, right? China discretionary, Chinese financials. I want to say last month.
Wow.
DWS closed 2 of their China funds.
Love this.
So this is what the sentiment, and this is part business strategy because they're not working, but it's also okay. Every once in a while, something like coal happens, and then the coal stocks rip.
Yeah, but it's business strategy. But that's the point, right? Like, like by the time they get wind of this whole thing, that China sucks, and they all get together and shut down the funds, and it's a huge pain in the ass.
Yeah,
there's information there.
So exactly. So listen, the long-term story for China stocks doesn't make any sense to me, but there's a lot of interesting little breadcrumbs being laid there. And people are really throwing in the towel. You pair it off of all the magazines you talked about, these issuers, everyone's out on it. EMX China is very popular right now, right? So there's the inverse of that.
Well, I was about to kind of just throw this out there. New 52-week highs yesterday for emerging markets ex-China. If you want to throw up
India, Taiwan, Korea.
Yeah, throw up slide 2.
TSM, right?
Right.
India is the beneficiary of this.
Yeah. So this is ex-China.
And so, yeah, I mean, this is good if you're an allocator. It also speaks to global participation, right? If we're talking about underlying market health. Can't beat that.
No.
So this is the new product pivot within the EM class that everyone's just saying we don't want any more China. It could be EM ex China. It can be FRDM is one that's really neat. They do it by social freedom, so it's very overweight. I guess like a Korea and stuff like that. No China, no Turkey. So I agree with you on the idea of using options there, but I do wonder
from a risk management standpoint or from a leverage standpoint.
For risk management.
Right.
I just think it makes sense. If you're just going to blindly buy a China fund right now, you're just asking for volatility and nausea.
Here's the difference between the emerging markets ex China. Throw up slide 3 there, Spencer, and then regular emerging markets, which include China, which I think is like what 30-some% China.
Of EM, yeah, I don't know what the number is right. It was 40 a few years ago, and now it's down at least.
It was 40. It's got to be in the 30s somewhere. Just
it might be even high 20s right now. I haven't looked. Exactly. Physics, India going up, Korea and Taiwan to an extent going up. So India is kind of eating away at that market share. That's the new thing in emerging markets.
The EEM is 26.5% China.
Yeah.
Wow.
It's shrinking. That is
17% India, 16% Taiwan, 13% Korea, 6% Brazil.
So this is the exact moment when you want to fade that strength in India. And
I think if you get the cues to come in, I would imagine India probably goes with it. It just, not that I have any statistical reference on that, but it feels like the same.
The charts look the same.
Yeah, they're the same. It's a growth trade.
Yeah. So, and how about Vietnam, Todd? When do they catch some?
By Nam. That's what is that? A frontier market? I guess is that even in EM? I'm not sure.
They're pumping.
It depends who you ask.
Highest level
who you ask.
Since like last summer.
I mean, those are just permanent stories. It feels like where they'll be on frontier for I don't know however long, and there'll be one. I couldn't even tell you a stock there. So if you want to buy it, go for it. But I don't know.
Been fast.
Oh, wasn't that a SPAC or something like that?
Yes.
That's a long-term allocation. I got nothing there on that one.
Todd, can we talk about semis?
Yeah.
Considering that's all everybody wants to talk about, we might as well talk about them too.
Where do you want to start?
Sentiment?
Semis are
like GC. I don't care about gold. Let's talk about semiconductors.
Semis are 2024's version of 2020's version of ARC. Does that make sense? 2020 semis are now today what ARC was a few years ago.
Based on what? Inflows?
Flows, anecdotal sentiment, momentum, right? This chart here, that semis are now 10.5% of the S&P. They were 2% a decade ago. Volume, right? Triple leveraged semiconductor volume, SOXL, is really starting to pick up. And it looked like what ARC was back in the day.
Yeah, so it's getting frothy. Is it as simple as this is now an economic growth story? This bull market is a big secular growth story, and these are the guys who fuel it?
So I will name drop here. Marianne Bartels. I don't know if it's a fill-in name. She's CMT. She worked at Merrill. She actually came in about
Bernadette's niece.
Yeah, I think so.
Yeah, Bernadette Bartels.
So anyway, she came into the Strategist office about 10 years ago, maybe even more. And she just looks at her phone and goes, "This is why you buy semis, because they're literally in everything we're using now." And she was totally right about this. 10 years later now, I mean, they've had their ups and downs, but they've been great. And so to Steve, your point, I think this is totally about every little thing around us is a semiconductor now. Your watch, your phone, Bitcoin mining, I'm assuming, needs stuff like that. Cars, planes. And I guess it also has to do with the whole, reshoring idea, right? Bringing stuff back here from China, and AI, however that plays into it. I couldn't explain that to you for the life of me. So it's part of that. It's part momentum. And it definitely feels like these names are powerful. I can't stand in front of them, but it definitely starting to feel very frothy to an extent, especially when you look at the leverage volumes.
It's crazy, but some of these stocks are still cheap. Their earnings are growing just as fast or faster than their stock prices. I mean, that's been the story for NVIDIA.
Yeah.
It's so hard for people to understand, but the stock keeps getting cheaper as it goes higher.
I mean, TSM, I think, just broke out over the 2022 highs, maybe.
So good.
So, listen, NVIDIA's, you can make the case, is a little bit stretched here, right?
Yeah.
In percentage basis, it's probably 60, 70% of its 200 day. It can get way more aggressive than that, and it has. Maybe AMD too. But then I think about a name like TSM, which, okay, it hasn't really gone anywhere for a couple of years. So it's this time frame perspective in a way.
Yeah. Don't buy the ones that look like nosebleed uptrends. There's
Yeah, I mean, look, what's Corvo and Skyworks, I think, are two that haven't really run yet. If I'm remembering
Skyworks does
correctly.
Apple stuff, don't they? That's a big Apple supplier.
I'm not
Corvo,
sure.
nice base. That's a great base.
So the one thing when you get stocks like this, when you get vertical momentum, is any sort of negative headline can send it cascading. So that's the risk here. And I would also say tech, from my work, tech flows are by far the most aggressive out there. Everyone is all in on tech right now.
Shouldn't they be?
Oh yeah, it's the right move. It's been the right call. I'm just paying attention to sentiment is probably getting a little offsides from tech. It has absolutely been the right call. I'm just mindful now of the second quarter of a speed bump happening.
Wasn't a really nice setup for tech coming into this year? You had that Q4 rally where participation really broadened and people started talking about real estate and financials and everything else but tech, and everybody's talking about this big rotation out of tech that's got to be coming because they outperformed so much in 2023, and it was just kind of like a ripe sentiment reset for these leaders coming into the new year, and then it was right back to the same place.
Yeah. I mean, they last July, I feel like we've talked about this. They got very extended last summer. They had a good shakeout into the fourth quarter, and then Halloween comes around, they bottom, and then have just ripped since. And so now you're coming up on what, 3 months of that, 4 months. So it's probably, in terms of time, okay, it's not unreasonable to expect some sort of pause at some point. And then they'll do their same thing again. They'll shake out.
Yep.
And unless something worse and more sinister is going on, I got to imagine they're just resets again.
Todd, I'm glad you brought up the sentiment in tech. Can you, and it's not just tech like the XLK, but, large cap, mega cap growth and all that stuff. A lot of things that get pulled in there. Yeah. Can you throw up slide 3, Spencer? So this is a chart of the performance of the MAG 7 ETF since our friends over at Roundhill decided to change the name from the large cap tech index ETF to the MAG 7 ETF. So MAGs, so 25% since November the 9th. But when you look at some of these components, Tesla getting the crap kicked out of it, Apple, Google, really not participating. So you're seeing some of the components since this business decision, we can call it, which, as we mentioned, is great. Actually, I spoke with the Roundhill guys the other day. Great guys, very creative in what they do.
Shout out to Dave Mazza. It's my guy.
Yeah, shout out Roundhill.
They just came out with leverage version of this, by the way.
Of course they did. So, any thoughts here on the internal deterioration of said 7?
This is how. So whether
magnificent variety.
Whether it's the S&P, the Russell, the MAG 7, this is how things start, right? You get the internal deterioration. The index masks a lot of the weakness. And if these names do not repair themselves and come back on the field, you're going to start to see more and more kind of roll off here, and that'll lead to the correction.
How people look at me like I'm crazy when a few weeks ago we were telling them we're shorting Apple. They're like, "Are you crazy? How?" Yeah. Everybody has an iPhone, JC.
Yeah, well, that's the problem, I think, right?
Todd,
they're going to benefit from this AI. Like,
Apple underperforming or even not even participating now in absolute terms. How much do you care about that in terms of a read on the overall market?
I think if you go back to 2013, I'm pretty sure the same thing happened where Apple was just kind of sideways and correcting the entire year, and the S&P was up 30. Clearly, it's more important now because of its weight. So now it comes back to, I don't know if I necessarily look at it as a read on the broader market. This might seem more...
Yeah, but also technology in terms of sentiment and where the world was at, psychologically.
Oh yeah, no one wanted
technology was not in 2013 what it is today.
Yeah, nobody wanted tech.
There was no recency bias. There was no, the home country bias was the opposite, actually. People investing in America were upset that they had so much American exposure.
And Apple wasn't
very different.
Apple wasn't what it is today either. Apple was trading at like a high single-digit PE. Steve Jobs had just passed away. No one had any faith in Tim Cook, right? They thought the whole thing was over for this company. Carl Icahn got in there, forced them to start paying a dividend. That was probably the last time Apple was in a rough spot.
Yeah. And so I mean, I looked at it as from the perspective of it was the largest weight than back then as it is now. But it comes down to, okay, well, what's the rest of the market doing? What's the equally S&P doing? If Apple's going to come off the field, and Alphabet too here, and Tesla, all right, well, is this finally the time where equal S&P is going to work? Because it seems like it's now or never, right?
Yes, and small caps outperform large caps, and the Dow outperforms the Qs, and value outperforms, right? At least at the large cap level, because you see small cap, growth outperforming. But yeah, why not? Isn't it the same thing?
The extremes are there, right? In terms of underperformance from small versus large, value versus growth, all of that. The extremes are there, and so now that you have some of the bellwethers falling off here, it would make sense that rubber band snaps back. Yeah. And small caps have held in well. I know they have this kind of super micro problem now, where it's 2% of the index.
Problem.
It's strange. It's in the Russell 2000 and the S&P 500. Yeah, that's odd to me.
Yeah, because that's because these Russell people take their sweet time to make changes. Yeah. That's not Standard & Poor's fault. It's not S&P's fault.
This is an index problem. So, I don't want to fight the Qs because they're the GOAT, but if I'm just looking for something that might be a little interesting, small versus large, equal weight or value over growth seems to make sense in 2Q.
Yeah. It's all the same thing. It's just it's not a market breadth thing. It's a sector rotation.
Yeah, it's It's financials, industrials, healthcare, and maybe energy. We'll see about energy.
Throw up slide 4. Here's an interesting one. Throw up slide 4. Todd, I know how much you love sentiment. I love every time Todd's here because we talk about all adjacent things.
It's the best input.
Great chart. Love this chart.
All right. So these are fund manager survey, Bank of America, Merrill Lynch, speaking of Marianne Bartels. And so here, actually, she's not there anymore, right?
No, she's at New Sanctuary.
Yeah. So these are the percentage of fund managers expecting higher inflation. None of them. The percentage of fund managers expecting short-term rates to go up. Again, none of them. Yep. So fund managers are saying rates are going down and inflation is not a problem at consensus. So maybe we take the other side of this, and it looks like slide 5.
Yep.
So this is what's actually happening. So this is what people think. Usually the worst performing people, I should say. This is what they think. No inflation, lower rates. And then go to the next slide, Spencer. This is what's actually happening. Spencer, there we go.
Okay. There you go.
Here's what's actually happening. So crude oil making new multi-month highs. Maybe that's inflationary, maybe it's not. Inflation-protected treasuries versus nominal yielding treasuries making new multi-month highs. Apple making new lows, right? They all look the same.
So here's the question. Are we sure the next move is a rate cut? Right? That's what these charts and that survey says to me.
The survey says that they're expecting rate cuts.
Yeah.
In reality,
I don't think that
the market is pricing in higher rates.
Yeah, exactly. I mean, I wouldn't bet on a cut. It don't seem to make sense. And then from the work I know, a lot of money is left energy. There's been a lot of money out of gold for what that's worth. I don't know how that'll play in the commodity space. And so the bar is really low, I think, for energy to catch a bid. It has clearly some messy trends. Some of them, Chevron doesn't look very good.
Yeah, but it doesn't look terrible when you zoom out. I mean, it's above all that former shelf of supply.
Yeah, I think it's just in this kind of frustration pain zone.
Yeah.
And if you can play it patiently, I like to think there's a decent bet there. I have been bitten and burned by energy so many times. So I'm probably talking out of frustration here. But a lot of money's left the ETF space. These charts would present something interesting into the next quarter or so.
Throw up slide 2. You think this one's got a shot? The new slide 2, Spencer. You think this one's got a shot? So this is up your alley. It's not the cleanest chart, but if there's an unwind in all of this, this is what that looks like. No?
Yeah.
I think it's got a shot.
I'll give it a shot, especially because we're talking about how the big S&P weights might be a little bit vulnerable here, right?
I'm saying.
And listen, that's what I bet. I think this is a more quarter-to-quarter trade, not a year-to-year trade for now. Maybe that changes.
Well, just in general, you're seeing a lot of different interesting setups. Spencer, throw up the new slide 3 that I just dropped there. You're seeing a lot of interesting setups where when the S&P 500 is the denominator, things look interesting. So in this case, you're looking at S&P as the numerator, EFA is the denominator. Massive difference in weightings. 30% of the S&P is in tech, less than a third of that in EFA. So EFA is developed markets outside of North America, in Japan, UK, France, Germany. Right, what do you think there? So again, trades against the United States, to your point, in that unwind out of mega cap tech, which is loaded up in the S&Ps. Isn't this the same as equally weighted S&P versus cap weighted S&P?
It's just value versus growth. It's literally the same trade.
Right.
It's all the same. And the thing I like about the EFA has got Japan. I mean, Japan, a little bit vertical here, but
you think?
I don't want to count it out. One of my all-time favorite slides is in my note today that I ever made with this Japan new highs chart.
I was gonna bring that up actually.
Can you please?
I'm just
slide
immensely
17, please. I got it. Actually,
dude, this is so good. This is such a good. This is so obnoxious. It makes me so happy. This is so ridiculous, Todd, and I love you so much for it. I love you so much.
It's my proudest chart I think I've ever made. That the market is not trading on.
It made me laugh out loud when I saw it.
Market's not trading on fundamentals; it's trading on Michael Keaton. All right, that's what matters here.
So good.
He was Batman and Beetlejuice 35 years ago. Now he's playing those characters again.
Hold on, is he?
Yeah, so he was Batman last year in the Flash movie. Okay, last summer, and another Beetlejuice is coming out in September.
Wow, I didn't get the memo.
I can't wait. I can't wait to see that.
I'm not kidding. So, this is how long it's been since Japan actually worked meaningfully.
Wow.
And I just had to throw a pop culture reference in there.
Great chart, Todd. Great chart. Give it up for Todd Sohn, everybody. Great chart.
It's all about Michael Keaton. But Japan acts great. I just am worried that some of those names are looking like NVIDIA, like Toyota. Or some of the even Tokyo Electron, right? That's a big semi name. Mitsubishi Financial, they look like tech stocks.
Dude, Muff G is out of control.
Yeah.
The Muff G.
They're just maybe a little bit offsides, but I will give it the benefit of the doubt whenever that pullback.
Todd, Uncle Warren was buying Muff G's holding company, the parent of that, right? Do I have that right?
Mitsubishi, I think, right?
Right, Mitsubishi.
Oh,
right.
Well, yeah. So there's Mitsubishi UFJ, then there's just straight up Mitsubishi, and then there's like Mitsubishi Electric. He was buying one of those versions, the big.
I think he was buying Mitsubishi Holdings.
Yeah, along with a couple other ones that escape me right now, and they have all just gone vertical.
There are like 25 listed equities that start with Mitsubishi in Japan.
Yeah, Toyota too. There's Toyota Industries.
But if Warren's buying the holding company, then he's getting the Muff G.
I think so. Listen, it's complicated. Things are.
I looked it up. I looked it up because I was kind of interested.
The easiest way is just to buy DXJ or EWJ, right? Hedge on hedge.
Which one?
What I like to tell people is 50-50.
Yes. I love this strategy. If you don't want to deal with the currency, you put half in EWJ and half in DXJ. Yeah. Love that.
I get the idea that maybe the yen will strengthen from here, and that makes you want to buy it in unhedged terms. But there's just so many variables involved with that.
Yeah.
So I like the 50-50. And then on the chart here, Japan, look, the allocations to Japan are up in terms of flows. Yep. But they're nowhere near the last big rip in 2012, 2013. That was a pretty euphoric moment when those stocks went vertical too. So I like this. I like that, the market doesn't seem to be paying too much attention to Japan as opposed to with the AI trade here, for whatever that's worth.
A lot of industrials in Japan there, Todd.
A great complement to the tech-heavy S&P. A lot of industrials. There's financials. And unlike Europe, where there's a lot of staples there too, you're not getting much of that here. So it's industrials, discretionary, financials. I think that's a good mix.
You throw up the new slide too there, Spencer.
I like the less exposure to staples too. Whenever I look at these European MSCI,
the UK the UK, it just has these massive staple names that are holding back that index.
Some pharma too. Like, I don't want those names either. Yeah, I know.
Looks pretty good.
This chart looks like the Borsa Milano, the Italian index.
Yeah,
Looks just
that's
like
true. That's a good point.
So
right?
good.
UCG, that one's also gone vertical. Speaking of Italy.
You know, Italy, Greece.
Yeah, Greece also.
Is Italy one of the pigs? No, Ireland.
Yes.
It is. Italy.
Yeah, there's two eyes in pigs.
Yeah. EWI, just look at that base. And USD.
EWI, EWP.
Yeah.
I mean, EWG is good. SAP, Siemens.
It's
The European autos are coming back. That's good.
Are they?
They're not great looking, but BMW, Porsche have started to act a little bit better.
Look at that. Beautiful.
Looks just like the MOF G. Same thing.
Viva Italia.
These were all the value names that haven't worked in a decade, right? And they all look like this now.
Man, I am drinking good Italian wine these days. My New Year's resolution was to drink less Italian wine and focus on other parts of the world. I've drank more Italian wine.
You need some sake.
You know that I'm a certified Japanese sake advisor? Did you know that?
I didn't know. I knew you were a sommelier, right?
I am a certified sommelier, but I do have
that's
some.
Cool. I like that.
I'm one exam shy of a sake som.
Oh,
Todd, why is it that people want to short the strongest stocks and the best performing stocks? Is that like a psychological problem that some humans have?
Yes.
It's
every day.
It's a gambling problem. Why do I lose $100 at blackjack? I got to double down, right? It's the same exact thing.
You go to casinos at your age, Todd?
I was in Las Vegas a week ago, 2 weeks ago, and I went to the Red Rock Casino.
Ooh,
which is out in the Triple R, ticker Triple R.
You're going to cool conferences without me?
No, I was there on a family vacation.
Oh, okay.
I love how you take family vacations to Vegas. I go to Disney World.
I went to Disneyland. I went to Disneyland in LA, and then I went to Vegas to see a good friend of mine. And so we went to this Red Rock Casino because he lives about 30 minutes from the Strip, which is interesting. Different vibes out there.
It is very different. Hold on. How was your bromance the other day? The two of you guys, you and Strazza and Todd Sohn, little mandate.
Oh,
at the ETF conference,
in Miami, yes.
I had a great time.
I threw Steve in a pool.
It was cool.
The conference was great. It was a bit of sensory overload. It was a lot going on there.
Yeah.
A lot going on.
It's like a Comic-Con for like financial nerds.
Exactly. It's literally Comic-Con. I just wish everyone would dress up rather than wearing, casual stuff like that.
Too many suits.
Hey, wait. Hold on a second. This RRR does not look like other casino stocks.
No, it looks great. A lot of the hotels and
that?
resorts and entertainment stuff is perking up.
Yeah. They're smaller. They don't have like these big strip casinos. They're like kind of out in random Nevada spots. Okay. But it was nice. We played at $15 tables. It was easy.
Nice.
Yeah.
Cheap tables.
Yeah.
I wasn't trying to pull a short Nvidia at the table at the Red Rock that day.
It just seems like whether it's super micro or now I'm going to go short the Bitcoin miners, just do nothing if you're upset.
Buy a put option. Just call it.
If you think the world's coming to an end, just go for a walk.
Go for a walk. If you want a put option, go for it. I would not sell short.
I've got one more. One more for Todd before the fun police kicks you out. Bonds, the last couple of weeks hanging in there pretty good, man. Right?
Yeah.
Look at 30-year bond futures up another 1% today with the NASDAQ down almost 1%. It's a little funky. Is all I'm saying. A little funky.
Bonds were the hot item for the last 2 years. They've kind of just been indifferent to them. I'm still very much focused on money market funds because the money is just piling in there still.
Yeah, but it's not until that starts to unwind that we really get interested, no?
Yeah, I think so. But you would need the Fed funds to get down to like 3% for that to happen because everyone's just so comfortable with 5%.
Think about this setup. We're talking about how risk assets are absolutely rocking out here. There's a new shitcoin mooning every night while we're sleeping. And Todd's talking about how cash piles are just, being raised higher and higher and higher. Sounds like a very, very bullish setup for an absolute ripper. And
For
you
one day though, but that's from last night's conference call. Monthly candlesticks, longer term. That's not a day trade. That's not a swing trade. Like that's like a catalyst, bigger picture for more structural trends, right? Would you agree with that, Todd?
Yes. Structural. Structural is the key word here.
Yes. So hold on. We change the subject. Bonds.
Yeah.
Up a stick here with the Nasdaq down a stick.
It's different.
It's different.
I'm kind of indifferent on 10s and 30s and stuff right now. I don't know if I have much of an edge.
Do you think that as this bull market has progressed, now we're a year and a half more a year and a half, almost 2 years in now, I guess a year and 3/4 into this bull market, as bull markets age, correlations come off, as right? Do you think that's that a little bit of that?
Yeah, I think things change. I mean, 2 years ago, right? We had Fed liftoff. There was this shock to the system that we got to get the inflation under control. The whole rate backdrop's going to change. The market has now adjusted to that over time. And so I think correlations will come and go now, right? Things are going to change. That's just always what happens.
Yeah, but correlations aren't just always changing. Like,
well, they change
you know
over
what I mean?
time.
They do over time, but like betting on correlations changing is rarely a good idea. Betting on correlations remaining in place in my 20 plus years of experience has been the better decision for me. So when I do see correlations potentially changing, it does stand out to me. And bonds are acting a little funky lately.
It's a new piece of information.
A new piece of information. Bonds been falling all year, and all of a sudden they're not.
Yeah, maybe someone out there is starting to get more worried. You know, things running too hot.
And if they're worried, do bonds return to a safe haven asset that they once were throughout most of our careers until recently?
I don't love the TLT. The TLT volatility is just stupidly high.
Yeah.
And I think that goes way overlooked from a lot of investors. You just plot the standard deviation of TLT versus a whole other, S&P EM. TLT is an outlier in terms of volatility. It's way too high for a portfolio. So you got to stay shorter duration, right? Cash.
Well, the joke was that until recently, that Strazza used to say was that cryptocurrencies aren't volatile enough, so he's going to start trading bonds.
I mean,
that was a real joke. It was funny at the time. Still is.
I'm very funny.
Steve is going
to be doing a stand-up tour pretty soon, which I'm looking forward to.
Nobody's going.
But I tell you, TLT volatility is way higher than I think most people think it is, just because it says bond on it.
All right.
So you stay down the curve. You stay shorter on the curve.
Right. All right. Todd Sohn, as always, you are the man.
Always a pleasure.
Thank you.
Great chart. That Japan chart. Big ups that Japan chart.
You're funny too, Todd.
You're making my day.
It's fantastic.
I just like to troll Steve. That's it.
That's good. All right. He's easy to troll. So.
He's good at it. Yeah.
See you, Todd.
All right. Thanks, Todd.
Take care.
That was so good. He's the man.
Hey,
does he lead the league in morning show appearances? Yes, right?
Yeah,
officially.
He will lead the league every single month for exactly one day. And then Brian Lund will catch him the next day.
Is Brian Lund coming on tomorrow?
That's usually how it works. Yeah.
So for our first podcast episode, who do you think is our first guest?
He's talking to you, not me.
What podcast?
Never mind.
What do we need to know that's happening this morning?
Well, what do we need to know? Okay, well, I mentioned Target off the top. They had a very low bar to clear for their earnings report. They did clear it. Stock is up 10% this morning, but still not in growth mode. They're in contraction mode here. So everything came in above estimates, but they're still falling year over year. So take that for what it's worth. What else do we have here? I mean, Neo had earnings. Gitlab was your disaster of the day. What's that down now? Oh, it's off the lows, only down 20% now. They had some weak guidance in their report.
What are we talking about?
Gitlab, GTLB. I think we have.
Google's gonna come by a bunch more, and it'll be fine.
Perhaps. So yeah, that's your disaster. Target's kind of the big one of the day. And so sort of watching that all day. They were good numbers for what the street expected, right? Earnings were good, guidance was all right.
This is still a broken company.
Yes,
Target.
yeah, they are still not. They're
It's
still trying to turn the ship around, right?
no good. You hear what they're trying to do? This new thing that they're unveiling today?
There was I saw something about a subscription or a membership. I saw something about that.
This is like the prize of Wall Street. Everybody wants to be in a subscription revenue business.
Yeah.
And for the vast majority of businesses, it just doesn't make sense for. And I can't imagine why anyone would feel the need to pay Target on a monthly basis for access to Target. Like, you're not Costco, Target. So I think this is very strange. You don't see Walmart out here trying to like build out some sort of subscription service.
Yes, you do. Yes, you
Like
do.
Costco?
Walmart Plus.
What is it?
You get delivery and stuff.
Well, Target already has that too. That's different from like paying to have access to the store, like Costco.
I don't know. I don't know what this Target subscription is going to entail. I didn't look too closely into it, but
It seems like a reach.
it does seem strange. It does seem strange.
We'll see. But hey, they're trying different stuff.
Yeah, they're trying. Can't say they're not trying. They're trying. We already mentioned that Apple headline that's going to make the rounds today. What else? Albemarle is doing an offering of depository shares, so that's why that stock is down a little bit. And that was pretty much it from the news front that I thought was important enough to discuss. Steve, did you want to talk about your Oswald Damodarian thing?
Yeah, so I have financial news on all day, and 99%.
How do you do that?
There's nothing good on. It's on mute, dude.
Dude, you want to know something funny? So when I turn my TV on, and I usually go to either the Disney app or the YouTube, and you know how like the smart TVs like automatically put something on?
Yeah,
right?
Freaking annoying.
It used to be like these like creepy like telenovelas before,
Yeah.
and now it's Bloomberg.
Mine is painting with Bob Ross, which I find very soothing. Yeah, it's
How do I
always
set that up? I don't know
turn
how
my
to do
TV
that.
on. It's the painting, and he's talking all like this, and you're gonna color this, and it's soothing. It's lovely.
Dude, it
Mine
puts
shows
on
me-
Bloomberg
mine
now.
shows
So
me
every time you turn
advertisements.
on my TV, Bloomberg comes on with like all the doohickeys.
I think they like get to know you, and they try to give you something that you like. I don't know.
Right.
Well,
But
if they're putting on financial television, they clearly do not know me at all.
So it's the 7:00 hour. I'm about to flip to watch the Duke NC State game, and Demodoran's coming on. And the way that they do this on cable news is you get like
What's a Demodoran?
Aswath Damodaran. So he's a very famous academic. He's an NYU finance professor, big valuation guy, very well known. They teach his teachings in other universities around the world. I remember learning about him when I was in college. So he had the most down-to-earth, practical take on bubbles. They wanted him to come on and scare people about the bubbles. And even the anchor, the host who was interviewing him was getting like awkward because he wasn't talking about bubbles being bad. He came on, JC, I think you share this rhetoric. He said, what is the problem with bubbles? And he made a great point that whenever there's impactful long-term change in the economy, right, in global markets, it happens with a bubble because we're humans, right? And whenever there's some sort of big, exciting, secular economic shift, we over-exaggerate the move. We get too excited about it, right? We hit a euphoria stage, and you get something like the dot-com bubble. Right? We completely blow it off, but we're not wrong to be excited about this new world that we're entering. And he kind of just talks about this is like a significant turning point, right? And that's when bubbles happen. And he was like, embrace it. And he made the point, he said, so even if, and he said, we're not in a bubble. He said, but even if you believe that we're in a bubble, NVIDIA is in a bubble, great. Exactly what are you going to do about it? Was his point. He said, are you going to go short every stock in the S&P 500? He said, go do that tomorrow. He goes, there's a 99% chance you will end up owing your broker money before this thing even peaks and blows off, right? So he's like, I don't know how that's valuable information for me to even think about because it's not actionable. And then he had this great quote, which I tweeted, and I wish I took more of it and tweeted out more clips from the interview, but it was very short and it was late. When bubbles are not actionable, I think we spend an incredible amount of time and energy worrying about whether something is in a bubble. When in fact, there are actionable things you can be doing in the market right now in things that are not in a bubble. It is such a simple way to think. It's the right way to think about it. Why waste your time and energy on something that A, you can't control, and B, really isn't actionable for you, right? And so
Also, Perlman makes a good point, you know, comparing like the tulips in cryptocurrencies, like in Bitcoin in particular. Like tulips had their bubble and then they burst and never came back. Here we are 400 years later, still haven't come back. Bitcoin keeps coming back, so they can't all be bubbles, right? That's the Perlman wisdom there. A little pearl of wisdom there. You know?
Listen,
yeah. There's also always a segment of the population that got burned by whatever the last bubble was, and therefore still burned, and therefore they want others to get burned.
Which is great because it causes that inherent short squeeze. So the people that are angry that they screwed up last time, they're holding back. And then finally, when they give in and they're like, oh, just get me in. That's the next stop, right? That's human psychology. That's what we're doing here every day, Spencer.
Everybody in the chat and on Twitter, just FYI, like if you're too embarrassed to tell me that you've missed this whole bull market, another way to communicate that to us is just tell us you're going to go short Nvidia or Supermicro, because we know what happened. So before you say that kind of stuff publicly, just, I don't know, maybe think it through. Not a good look.
Yeah. It's a bubble is translation for I'm not in it.
I missed it.
I missed it because I suck at this, you know.
But no, I thought that was great, especially from a valuation guy, a heavy fundamental guy. Typically the ones who are complaining about the bubbles, right? These fundamentalists, and he's on there just talking like a technician about it. This is where we are. What are you going to do?
Was it Soros? It's like whenever I see a bubble, I go and buy it as soon as possible.
Buy it.
Yeah. Shout out Soros. Shout out George Soros. You know.
So I thought that was good. I'll also rant on this B. Riley for a little while. I know nobody's
the Republicans hate Soros, right? Is that the
yes?
Yeah. Don't both political parties hate him?
A lot of people do hate this man.
Yeah, people seem to hate him.
Yeah.
I don't know.
All right.
Anyway,
He's a gangster,
Steve.
Though.
Steve, I have not been following. I mean, the B. Riley thing I've seen it, and I know that there's some funky stuff happening there with the filings, and I know that a short seller that we both follow has been pounding the table on this for a while now, but I don't really know too much about it beyond that.
I don't know much about the specifics. It is something to do with a related party transaction that they are not disclosing as a related party. This has been boiling up for a while, and you see it in the price action. So B. Riley might have been last year the single stock that had the most Form 4 filings. Bryant Riley, you know, one of the family guys, probably the son of the founder, whatever, is just coming in there buying stock. And I said to Alfonso quarters ago, this is strange. Yeah. This is really weird. Something's going on here. I thought it was a control thing, right? Like he was trying to seize up shares. Maybe there was like some sort of family fight going on for control. It wasn't. He was trying to.
I remember you saying that because that was your guess without like really even looking much, right?
It's just straight. Like you see things that this is different, right? And this has been a different one. And now it comes out that they're dealing with a big issue internally. They had to delay the filing of their financials. They're not getting a sign off from their auditor. It looks really, really bad. They're paying for promoted research. I saw something yesterday that was going around on Twitter. One of these promoted research firms took a Form 3 filing and tried to use it as proof that their audit's going fine and their financials are going to be released. So it's bad and seems to be getting worse. This is a cannot touch. And I will say, I'm going to reach out to Mark Cajotes because he is he's like the people's short seller. Right? He's not a hedge fund. Look at this man's track record. He is spot on the money almost every time. Trust me, I was long Silvergate when he was short and went to zero. So I learned the hard way. I would not take the opposite side of this guy ever. He has just been so good for so long at what he does. And he feels very strongly that Riley is a zero and that Bryant Riley is going to jail is what he's been saying. So this is becoming like a real battleground situation. Total don't touch. But I just thought it was interesting because we saw those filings kind of pouring in ahead of this and before this was all exposed. But it seems like it's coming to a head really quickly. And it'll be interesting to see how this plays out.
There was like a really bad transaction that they did. I now that you talk about it, I remember reading about this like a month or so ago. They bought, it was some buyout, and it was like a toxic hedge fund that they bought, and there was a whole thing around that. So there's a lot of mess.
It's becoming a creative accounting story, Spencer, where they've tried to muddy the waters so much that you can't really figure out what's going on in the financials with these acquisitions and stuff that is the way it sounds. I listened to his spaces, kind of got the high level. I think we should have Mark on though to kind of explain this. He's an interesting guy.
All this being said, you talk about the fact that they delayed their filing. That was on Thursday, I think. Okay.
Stock is rallied.
Yeah, we've reached that point in the cycle where
paid research. They're pumping paid research out.
I was gonna say stocks go up on bad news, which is an indicator. So
I mean, so this thing has been pricing this in though for a long time, right? It wasn't out, but this thing's from just last summer, 60 to below 20, just last week, right? So it's been falling like a rock.
All right.
I don't know. It's something to keep an eye on. I'm interested.
Hey, let's bring on Patrick. We got Patrick in the house. Yeah,
fraud is fun. At the end of the day, frauds are very fun.
100%, dude. I love them.
Let's have fun with these frauds.
Hey,
Yo.
Pat.
How we doing?
What's going on, my man?
Oh, you know. How about the Bitcoin?
How about the Bitcoin?
You finally got it.
Are all the kids talking about it?
All the kids. You know, it's not even Bitcoin. It's all the other ones, the smaller ones. The ones you haven't heard of. And
the ones that we've been talking about. The ones that Louis been talking about. Right?
Right.
Yeah, you're right.
Yeah.
And the ones with names that I can't say on here. So.
Yes.
And what about, like the cum rocket?
Yes.
Token.
Precisely.
Token, JC. Token.
Precisely.
So what about the gold? Are you seeing much love from gold? You know,
yeah,
it's making new all-time highs. Like everyone's
focused on
the
love,
stock.
JC. I would call it disbelief.
Disbelief.
You know? Disbelief. Yeah, that's it. Because people have given up, right? I mean, we've seen this so many times before that we'll see if it's for real this time. But that's when the best moves happen, is when everybody kind of gives up. So we'll see. Is it moving today?
Yeah, it's up 0.5%. Closed yesterday at the highest levels ever. So, you know, you got your ear to the ground. You talk to a lot of people. You read a lot. So you're thinking people are talking about it, but it's not like this, like euphoria. It's more like, wait a minute, gold's making new all-time highs? Like,
right,
more
exactly.
Like that, right?
Right, because it kind of came out of nowhere, right? Like Bitcoin, that's been slowly moving higher for 2 years now, right? But gold, I mean, I guess you could kind of say the same, but it seems like we were just kind of hitting that 2000 level or 2050 for the longest time. And then all of a sudden it's like, wait, what? Gold's at an all-time high? So yeah, definitely kind of caught a lot of people off guard, I think. Caught me off guard. Maybe I'm just speaking for myself.
Spencer was about to take gold off of his watch list. I mean, that's how bad things have gotten. Spencer's like, I can't even look at it. It's so ugly.
Boring. You know?
I can't talk to Strazza about it. He's his New Year's resolution was no gold talk.
What does that tell you? What does that tell you? Here we are making new all-time highs. Now, when you look at individual gold miners, there's almost nothing. And even the best looking ones, like maybe like an Alamos or something like that, they still don't even look great. They just look less shitty than the other ones, you know?
Yeah. Yeah. Do you need to see that, do you think? Like, in order to get really behind gold, do you think we need the miners?
Yeah. And also, you know, I mean, listen, I'm in. I you know, trade what's in front of you, but you know, bigger picture, you know, you want to see silver outperforming gold. You haven't seen that until really kind of like the last couple of days. You haven't seen the gold miners participating either. You know, once you start seeing like the junior silver miners breaking out, like by the time we get to that point in the cycle, like now we're getting going, we're nowhere near that. That's how I look at it. Strazza, what's it going to take for you to give a shit about precious metals?
Is that what we're talking about?
Yes.
Oh, sort of. Oh wait, he's just
what a dick. If that's not evidence of current market sentiment, I don't know what is.
All right, Pat.
I gotta respect his commitment, honestly.
Pat, what's on your mind here, but not gold?
So you know, you said we're kind of a long way from top on gold. But one of my favorite technical indicators I got for you guys today. Do you guys have the charts I sent you?
Yes, we do.
So this is called the Pi Cycle Top Indicator. It's one of my favorite technical indicators of all time. So it's just a moving average crossover, right? Just like the golden cross. But this is like the golden cross, or really the death cross, because this is a sell signal. It's like the death cross on crack. What you're looking at is a 111-day moving average, that pink, and then 2 times the value of the 350-day moving average. And when the pink one crosses, you get a sell signal, and it's almost always been within like a day or two of the
Where'd
peak.
Where'd you get this pie indicator? Where did this come from?
This is deep on crypto Twitter. I didn't come up with it.
Have you been hanging out with Bartoloni?
No, believe it or not. I actually showed this one to Bart because the reason it's called pi is I think if you divide 350 by 111, you get close to pi. I don't know what the significance is beyond that, but you got to admit that's a pretty timely indicator.
I do love pi.
But
yeah,
this is
look at
Patrick.
Look at where they are though too, because they're pretty far from crossing, and you need a really like exponential move. You need a huge price move in order to get that crossover. So, I said, it's kind of saying party on here, because in order to get that cross, you're going to need a huge price move here. So we'll see.
So this is interesting though, because it's different. It's the opposite intuitively of a death cross, where the short-term moving average is crossing down below it. You're talking about this being a sell signal when the short-term moving average shows momentum and crosses up above. It's a little different.
Is it? Well, okay, so it's 2 times the value of the 350 day. So yeah, I guess you're right.
You get what I'm saying?
Right.
Oh yeah.
But
this is basically saying the upside momentum is so strong, it must be exhaustion.
Right, because I looked for it on other things. I was like, okay, where can I find this signal elsewhere? Like, has it been good on anything other than Bitcoin? You almost never get a signal unless it's like AMC or GameStop or one of these just crazy moves.
Have we gotten a signal?
Hold on.
You lost me at the 357-day moving average.
No, JC, the point is we're far from a signal. So
we're far from a sell signal.
Far from a signal, and it's going to take a huge price move to get a signal.
Okay, so keep the hodl. Keep hodl.
So party on.
Hold on, because I hate when there's bad math in the chat. GRV, I did some Excel math. It would require 200, 300,000 Bitcoin. That's not how this works. This is not about a certain price level that triggers this indicator. This is about how fast it moves up.
Right.
This can happen at 90K in a couple weeks from now if it gets there fast enough. There's
no Patrick, with all this fancy math, what you're saying is that this infamous pi indicator is not indicating a sell.
Exactly. Right.
That's good enough for me.
I can't wait for all the crazy on-chain charts and all these people making these calls with this funky stuff. It's just great. Crypto is so fun. I'm just so happy. I'm so grateful that we have this beautiful new asset class that we get to have fun with and trade. And
it's still new? You think it's new?
It really is like a sandbox, where you can just kind of play around, see what works.
We're like 15 years in. When? 2009?
Hey, I own some Sandbox. Shout out, new highs.
Of course, that's a coin.
Well, it's been a coin. It's a metaverse.
Yeah, this is a Sandy Dandy. It's one of my favorite coins.
Yeah,
Sandy Dandy.
Listen, the chart report is tied for first with my favorite email to get every day. Can you, Spencer? Can you give the folks the opportunity to get the daily chart report? If you're not getting the daily chart report every afternoon, your life has gone horribly wrong. Get the chart report. Find out what the best technicians on the planet are looking at and doing every single day. Takes 2 seconds to read. Those are my favorite types of emails. I got too many kids to read long emails.
We got Dr. Phil Perlman as chart of the day yesterday.
Whoa, Dr.
Shout out to Phil.
Dr. Phil Perlman with the chart of the day. Love that. Chartreport.com.
There you go.
It's right there on the screen. QR code. Just hold your phone up and do that. It'll scan. Amazing.
Pat, stick around for recess.
Sounds good.
Technology. Oh, we're doing recess now? All right, cool.
Yeah,
Let's do it. All right.
Can you please?
I don't know.
So listen to this, Strazza. You'll appreciate this. So it's Boys Week here at the Parets household. The girls are down at Disney World. My wife and my daughter are down at Disney. So it's just me and the boys. Let me tell you something. These boys are so much more chill. And they're 1 year old. These boys are so much more chill and relaxed and cool without the girls here. Like when it's just the boys, they're so chill. When the girls are here, like they're going fucking crazy. Like, it's just the boys. It's like I don't even recognize them. They're just so chill, laying out on the couch, drinking milk, watching a little Mickey. It's pretty cool to see.
Well, it was like quite the turn, right? Because you guys were a little girl heavy in the house for a while, and then you just popped out too, and now you're boy heavy. So
They saved my life, Strazza. They saved my life, man. I was convinced I was going to be a girl dad, 3 girls. Holy shit, I can't even imagine. One's enough. The 2 boys, and I will always thank them as they get older. They start to understand. I will look at them and be like, "Thank you, saved my life. Saved my life.
being boys.
Thank you for being boys. You saved my life." That's right.
Very nice.
Oh, that's great. Well, I hope they're having a blast in Disney. That's so fun.
They are.
Nice.
The house is very calm and cool without the ladies around.
Not bad.
We love them, but man, it's a whole nother ball game around here these days.
Good.
Yeah.
What, didn't someone point out that your family's growing like according to Fibonacci math? It's like it was like 1, 2. Yeah.
It was 1, and then there was still 1, and then there was 2, and then 3, and then 5. Yeah, that's right. It's true.
Wow.
I don't have a recess today.
My recess is I've got one. Last night I watched the entirety of the Jason Kelsey retirement press conference. It was 45 minutes, and more than half of it was probably him crying. And I almost teared up. I'm not even an Eagles fan because he's so damn likable, man.
Is he though? Is he really?
Yes. I think he's the most likable athlete that's never been on my team. And he was so emotional the entire literally.
And you hate the Eagles.
I don't like the Eagles. I don't know if I hate them. I definitely don't like them. I don't like
Most people
Philadelphia.
hate them.
I don't like Philadelphia sports as a general rule. But he sat down and was like crying immediately, just like immediately. And and oh man, if you haven't watched it, if you're a sentimental person, if this for you, if you're sentimental, you will love this because it was 45 minutes of just pure sentimentality and emotion, and it was wonderful. It was great to see. That's why sports are great. So I watched the whole thing last night.
All right, fine. I don't know why you're crying at somebody else's retirement who wasn't even.
I don't know why either, man.
But sports can do this to you. I had a moment like this the other night. It was senior night at UConn at Gamble Pavilion, and I've been to enough of them over the years. And the senior players, it's like a big moment for them. It's their last night at Gamble, and it's emotional. And Cam Spencer just lit it up, and big hugs, with all the coaches and stuff. And I was thinking, oh man, Kemba Walker and all my homies back in the day. But I get it. Sports do that to us, and that's why we love them.
Yeah, for sure.
I also will say, if we're doing sports, shout out New York. I can tell that the Rangers are really good this year just because all my buddies from back home are pretending to be Rangers fans again. That seems pretty exciting.
There you go.
I hope they end up playing the Panthers. They played last night and lost. I hope they end up playing the Panthers in the playoffs. I'll shoot up there for a game. That would be awesome.
I freaking love Rangers games. Cubans know nothing about hockey. But man, it's a good time. That's all I'm interested in. Good time. I got invited to so many Rangers games over the years living in the city. So fun. So fun.
Yeah, probably no better atmosphere than a playoff hockey game.
When they play the Bruins or when they play the Devils, these guys are crazy. Dude.
Listen, I love me some New York Knicks, but hockey live, like a Rangers game live at the Garden, is a far better experience than a basketball game live.
It is. No doubt.
These hockey fans are crazier than the other sports, though.
Yeah,
Rangers Devils is like far exceeds the craziness of Red Sox Yankees by like by 10.
I don't know. It's close.
He's also just a really cool badass sport.
Oh yeah,
pretty badass. Cubans, like I said, Cubans don't know nothing about hockey, bro.
No, you guys can't even skate. You never skate.
You don't even have ice.
Pat, you got
the
anything?
ice is in the drinks.
Nothing at the moment.
All right.
Twitter Spaces, we're back. Chart Request live today. I'm pumped up. I missed you guys last week. You ready?
I know. Had to hold it down. But yeah, no, we got Spaces coming up in a little bit, so stop by that. And then me and Strazza. What time is it? 1:30?
1 o'clock.
1 o'clock. There you go. Yeah.
I forget what
the,
time
the time zone, you know.
All right. Email your request for CRL or questions at stockmarketmedia.com. They'll try to address it during that. Thanks to our guest today, Todd Sohn. Thanks to Patrick. Thanks to all of you in the chat. See you guys later. Go get some money.
Adios.
Later.
I can't take no loss. I don't even know what it costs.